Today we're going to be talking about Hedera Hashgraph, one of the cryptocurrencies that I've definitely had on my list, and that list is growing just because of the comments that you guys are leaving. So please, show your coins, hodlers. Now these videos do take a bit of research and a bit of time to put together, so I do appreciate the subscribes that you guys have been giving me. Now let's talk about if you should be adding HBAR to your portfolio. Let's get into it. Hedera Hashgraph is a publicly distributed ledger that allows people to interact and transact with each other without needing that third party. The purpose of Hedera is to provide a stable, trustworthy network for enterprise-grade decentralized applications, not a cryptocurrency. But just like other blockchain systems, Hedera needs a cryptocurrency. You can't have blockchain without the token. HBAR serves two main functions on the network. It is the network's fuel, or the gas token, to complete transactions, and helps with network security. HBAR is another one of those proof-of-stake coins, so obviously it's a little bit more secure than the average proof-of-work coin. Each time a transaction is completed on the Hedera network, a transaction fee is taken, which is usually just a fraction of a cent. Those transaction fees are paid to the nodes that run the network. HBAR protects the network from attacks through its coin-weighted proof-of-stake method. Let's talk about the technical aspects. Hedera has a TPS of 10,000, which helps the system scale, and actually scales way above most other blockchains out today. Just like XRP and Stellar, Hedera is run on a distributed ledger, which is a blockchain operated by nodes. Each transaction fee comes to 0.001 USD, and it settles between 3 to 5 seconds. There are currently multiple generations of blockchain technology, Bitcoin being the first gen, Ethereum being the second gen, and blockchains like HBAR and Cardano being a third generation blockchain. It doesn't mean that legacy blockchains won't survive, but it does mean that industries and organizations will move to the higher generation blockchains that'll solve a little bit more problems. How the blockchain works is a little bit different than average blockchains. The blockchain sends information to a random node. Each send point has a signature, timestamp, and 2 hash rates. One of the hashes are encrypted with a message that was sent, and the other one with a message that was received. This is bounced around to every single node. This way the ledger can verify when the messages were sent and received. The ledger records these transactions almost as a graph, and transmutes this to every single participant on the ledger. This means that every node has the exact same graph and is always at consensus. So this means that there's no additional messages or confirmation that's needed to be sent out. It's a truly voterless consensus system. Consensus happens by tracking the following information: the transaction date, the event order, the consensus timestamp, the received time for the active node, then active nodes at the time sent. This algorithm allows Hedera to operate while everyone is at consensus at all times. And again, this becomes true voterless consensus. We don't need to confirm that everyone agrees, we already know that everyone agrees. The important thing to note here is that this is an effort to remove bottlenecks that have been a problem with legacy blockchains like Bitcoin. Now it's a bit weird to reference Bitcoin as a legacy technology, but really, we're 12 years in, and at this point, better technology is going to come to play. But the great thing about blockchain technology is that there's plenty of room in the space, and there's definitely going to be a need for a great store of value like Bitcoin. And as I said before, we're entering a multi-blockchain world, so there's going to be plenty of room for any credible project. Let's talk about the use cases. Hedera is targeting enterprise solutions, servicing industries between logistics, gaming, real estate, investing, and more. We have discussed things like tokenized assets on this channel. Hedera is a great candidate for something like that, especially with a blockchain as scalable as Hedera with a 10,000 TPS on ledger. So these problems are definitely the targets for the Hedera team. Hedera's governance is a little bit different than other blockchains. Considering that it targets enterprise solutions, it is actually governed by the enterprises that it tries to serve. This council is comprised of over 39 industry leaders, and this is distributed between 11 industries. This council makes key decisions over software upgrades, network pricing, and many more. The council is comprised of 11 different industries, 1 university, and 1 non-for-profit. Every member of the council must run a node without compensation. There are 5 committees in the council, and each member has a 3-year term with up to 2 consecutive terms. Hedera handpicked the initial 38 council members. The council membership committee will appoint the future candidates. The council currently includes companies like Boeing, Google, IBM, LG, Deutsche Telekom, and many more. So obviously this council is comprised of massive industry giants. And again, they have full control over the system and where the ecosystem goes. A lot of people could take issue with a group like this, directing the actual pathway that a blockchain takes. But the reality is that organizations and enterprises are going to need a blockchain to facilitate accommodate their solutions and their needs. So it's not unrealistic to think that they would create their own blockchain and govern it themselves how they think it should be governed. At the end of the day, me and you can go make a crypto right now, and it's completely up to us what we do with it. But there's no doubt that they definitely have their eyes on the big ticket items. And again, Hedera is more focused on the actual problems to solve, not the cryptocurrency itself. But like I said, there's no blockchain without tokens. So while HBAR's value isn't really a goal of theirs, it is something that's just going to organically go up as the system's being used by these industries. There are 50 billion HBAR in existence and just below 7 billion in circulating supply. There's currently a schedule in releasing the HBAR at this schedule up to 2025. After that, I assume that the council makes decisions on exactly how the future HBAR is distributed and how that's released. But it's important to note that HBAR is a non-inflationary asset, so it doesn't increase. There can never be more than the 50 billion that was originally made. Now, a good portion of this HBAR actually went to initial investors or SAFT holders, and then 54.9% went to the Hedera treasury. Hedera plans to distribute the coins in the treasury over time to projects that enhance the ecosystem and help the system grow. So any initiatives that would support the network. They mentioned in the white paper that this could be in the form of grants to employees, contractors, and vendors. And additionally, they'll sell tokens to cover operation costs. I know the tokenomics are a little bit weird, but the reality is that these organizations are going to try to hold as much as they can and keep as much in the ecosystem as possible to benefit themselves and the ecosystem, which is fair. When you're investing in crypto, you're not investing in a token. You're investing in the value of the system. So when you buy ADA, for example, you're investing in Cardano's system. It's like buying a little bit of a piece of the internet. So, is HBAR a good investment? I personally would say yes at this point, just because of how well it works, where it's targeted, the solutions that it solves, and the problems that the council has in their perspective to solve with this blockchain. HBAR's market cap is sitting at around $671 million, which is relatively low considering market caps. And again, with any low market cap, you're always going to get a little bit more risk. Over an amount of time, I think Hedera is going to garner a much larger market cap. And I do understand the concern of going into a coin after it's been pumped, but let me just talk about this for a second. I know a lot of people are speculating, when are we in alt season, what's happening with the bull market? But the reality is we're not in alt season, and we haven't hit the top for Bitcoin. There's going to be lows and there's going to be highs. We can't expect that the market's always going to go up. But I am expecting this bull market to last until September of this year. That being said, I definitely expect that there's plenty of room for altcoins, especially HBAR, to grow in that short amount of time. So I do think that we have at least 6 months of gains still ahead of us. And I would like to point out that I'm not always a massive bull, but I do get bearish when I need to be. And I'll be sure when I expect that the market's going to take a turn or it's not going to recover, I will be sure to make a video explaining exactly why that is. And keep in mind, when you're adding HBAR to your portfolio, a lower market cap is a little bit higher risk, but higher reward. Thank you very much for watching. Just a quick note, I do a lot of research for these videos, put them together and really try to make sure that I'm giving you the correct information, so I'd appreciate a subscribe. We've already grown so much, so thank you very much to everyone that has subscribed. I really appreciate it. Definitely go check out one of my other altcoin analysis videos. I have a nice playlist down there below, somewhere there, and it's linked everywhere. Just, you got it, you got it. All right, thanks everyone, happy hodling. Thanks everyone.